the first cut in the dividend since World War II. Do you feel the weight of history then as you make this decision at Shell?
Of course, Anna, and thank you very much for having me. It's of course a difficult day, but on the other hand, it is also an inevitable moment. We are basically facing two problems. One, of course, is the very poor macroeconomic environment, which is getting worse. But the other problem, which is probably even bigger, is that we basically have a crisis of uncertainty. Uncertainty about demand, about prices, maybe even uncertainty about the viability of some of our assets, given all the logistical issues that we have. So we have taken some very strong and early countermeasures to protect the financial resilience of our company. And you've seen before that we have taken a reduction in capital cost and operating cost, $8 to $9 billion over 12 months. But frankly speaking, these countermeasures are not enough to deal with the unprecedented uncertainty that we are seeing. So the board has decided that it was prudent to also reduce the dividend. And then early this morning, we have decided to reset the dividend to 16 cents going forward, which is still a meaningful dividend and an affordable dividend, Anna.
And you won't continue with the next tranche of your buyback either, Ben. Let me ask about your debt. A lot of companies and countries are having to deal with much higher gearing. You were already at your comfort level before this crisis, but changes are going to have to be made, I guess, to our comfort levels here. How high do you expect your gearing to go, and when do you want to turn it around and start bringing it back down?
Very good question, Matt. And indeed, when I talk about financial resilience, which is, I think, the key thing to protect with such an uncertain outlook, it is both about the debt levels that we feel are appropriate, but also the liquidity that we have. Now, our debt levels are outside the range that we would consider to be normal over the cycle. We end up at a gearing slightly less than 29%. We would really like to be below 25%. And of course, in the next quarters and perhaps years, depending a little bit on how this plays out, we will do everything to get our gearing back in the range that we need to have. Liquidity is fine. We do not have to worry about that. We have more than $30 billion of liquid funds to have access to. But the point is, we have to protect these levels of financial resilience. And that's why we had to take these very drastic countermeasures, and we had to take them early, and we had to take them decisively.